And in our top business story, retail banking in the UAE is going through a transformation with the fundamental changes led by fintech and technology. That's according to Subroto Som, the head of retail banking group at Mashreq. The representative of Mashreq Bank was quoted in local reports as saying that banking in the country will look very different in 2 to 3 years' time, as fintech is changing the whole sphere of engagement with inclusion at the lower and transaction at the higher end. It was added that looking ahead, bankers will require foresight to decide on where to spend time and capital. However, it was added that investments towards new technology projects are becoming cheaper than ever. Credit Bureau was identified as another factor affecting the country's retail banking, according to the spokesperson, as it has brought greater transparency in credit data, which should also ensure responsible lending to customers. It was further stated that the changes will make credit available at reasonable and better prices for the customers and will allow for greater differentiation of high-risk customers. The presence of the Credit Bureau is also expected to end the UAE's historical cyclical pattern, which brought in few years of good business, followed by a few turbulent years, according to Subroto. In line with the fundamental changes, Mashreq's head of retail banking further stated that banks will now require greater knowledge, ability and expertise to manage the transformation, while focusing on cooperation and creating greater value for their customers. The Board of Directors of the UAE Banks Federation has held its first meeting of the year, headed by the chairman of the Federation, Abdulaziz Al Ghurair, to discuss progress on a number of high-priority topics for the Federation this year. The topics included progress on the mobile wallet project and the creation of a higher Sharia Board due to be introduced soon under the supervision of the UAE Central Bank, which is intended to strengthen consistency and consultation across the Islamic finance industry in the UAE. The board also reviewed regulations governing risk management and liquidity in UAE banks, the continuing challenge of de-risking, closed netting and the program being finalized by the Federation to address cash flow and debt problems faced by small and medium enterprises in the UAE. Dubai Multi-Commodities Centre's Tea Centre has announced that the Free Zone handled 41 million kilos of tea through its centre in 2015, representing a growth rate of 208% over the last 3 years. The figures come weeks before the DMCC Tea Centre is scheduled to host the 6th edition of the Global Tea Forum from the 5th to the 7th of April, bringing industry leaders to discuss the growth opportunities of the sector as well as future cooperation. According to the DMCC Tea Centre, they currently process teas from 13 different countries, which include Kenya, India, Sri Lanka, Indonesia, Malawi, Rwanda, Tanzania, Mozambique, Vietnam, Japan, Uganda and China. Commenting on the growth figures, Sanjeev Gupta, the director of the Tea Centre, stated that the country continues to act as a global trade gateway, adding that the department's goal is to connect market participants in the global tea industry and to enhance the value of goods across the supply chain. To support Dubai's position, the Tea Centre had, in 2014, initiated a 2-year capital expenditure program into new facilities, spanning a total area of 24,000 square meters. According to DMCC, the global tea industry is worth around $38 billion, which is also experiencing an average annual growth rate of 3.42% since the beginning of the 21st century. Furthermore, tea is cultivated across 3.7 million hectares of land globally and produces an annual crop of 4,100 tons. UAE master developer Nakheel is targeting European investors with a diverse range of products worth 4 billion dirhams as it attends MIPIM, the world's largest real estate event, for the first time. Investment opportunities include around 100 land plots for commercial, residential or hotel development and around 1,000 built-form residential units with rental yields of between 5 and 9% annually at prime locations across Dubai. The only Dubai developer exhibiting at the conference this year, Nakheel is looking to add to its already extensive pool of European investors, whose investments currently total nearly 7 billion dirhams. The company will focus on institutional investors and those in the hospitality and retail sectors during MIPIM, which has 21,000 participants. Since its launch in 2001, Nakheel has delivered a range of iconic landmark developments that have helped transform Dubai into a world-leading destination for living, tourism and trade. The company awarded construction contracts worth 8 billion dirhams in 2015, with another 8 billion dirhams due this year for new projects being developed in line with the government of Dubai's vision for 2021.